Okay, so hello and welcome back, guys, to the channel. And today we're basically going to be doing our deadly scalping strategy, but on V75 pair, right? So last time we did on V100, and today we're going to be dealing with V75. But before we get into it, make sure you like, subscribe if you haven't, turn that bell button on for notifications, and let's get into it, right? So right? We're basically on the V75 pair in the 15 minutes, but we're gonna be looking for the same three things, right? Which are structure, S&D, right, and confirmation, right? So these three things is where the whole MMC footprint strategy is rooted from. Now we're gonna start identifying one thing after another in the chart, right? So as I said yesterday, right? Per se, we have a structural impulse bullish that breaks structure. We're going to be looking for the next thing, which is the S&D zone that we would want to see price make its way back into for that mitigation. And once that mitigation, we want to see these changes in price character or structure, right? We want to see these breaks of structure to the top side to indicate that this intermediary um, bearish trend is now done, and we're starting to print a new long-term bullish trend, which is the one that we're basically going to be dealing with, right? So per se, that's entry one, entry two, and then price from here could now make its way back up with this high as its next liquidity run, right? So let's get to the charts and see how all of that is applied, right? So this is like the V75 pair, but we can't use these very old price actions like here because um, the confirmation part won't be available. So we're just gonna have to deal with the most current, I shall say most currently, yeah, price action, right? So let's look at this break here, and like probably the break to the top side, and see how we could have got that entry, right? So now we have what? We have this break, right? So we had structure going, okay, so structure from this area here, price made a break, a retest, right? An intermediary higher, break lower, just a liquidation move according to the Elliott wave theory of structure. And then we had this break, retest, right? And then the break right here, right? And then that retest. So let's see now from this retest here, right? Because we now have, or we already have a structural impulse which is bullish. So we're now identifying our S&D zone, which is actually this one, right? So let me clear these. And okay, so we now have that break, and from that break, I mean, with this from this high, from low to high, right, with that break there, we now have multiple zones that do require mitigation, or yeah, mitigation. So we now have area 1 and area 2 down here, right? So boom, so these are like the uttermost S&D zones. So like you could just use them as a whole, right? So this whole area here is where we're basically going to be looking for the confirmation part, right? This whole area here, because like I do think I said something about this in the supply and demand video. When you have a supply zone and a demand zone and demand zone 2.0, or supply zone and supply zone 2.0, like they're most probably aligned or very close to each other, you can use them as the whole thing themselves, right? So let's now head to the 1 minute time frame and see how we could have confirmed this. So okay, so I did pause there for a minute. The 1 minute time frame isn't available at this data point far back, so we're just gonna do it with the 2 minute, right? So from its standpoint of view, right, we had this, right? So we had this, and then this, right? So this break here indicates the bullish bias, which means that we're now waiting for the pullback into the demand zone, and from this demand zone, we want to take price higher with this high as our TP or next liquidity run, right? And from here, you could either hold or do whatever you like, because the risk management is all up to you guys, right? This is just knowledge and not any sort of financial advice. So from this area here, let's now drop down in here, zoom in, and see how we could have taken this entry, right? So as I did say, right, so once a low and a high are made, right, when you have something like this, right, with this break, price, the S&D zone right there, right, price from here is going to put an intermediary bearish trend to go and mitigate this area, and once that mitigation is done, we want to see price change its character, right, from bearish to what? To bullish, right? So what we wanna see is this break, right? That retest entry, hopefully a break again, right? A break, that retest entry again, and take price bullish from here towards the overall high as our next liquidity run. Lo and behold, that's exactly what we're looking at here, right? So we had that low and this high, and from this area, look at what happens, right? Price puts into place an intermediary downtrend from this high here, right? As you can see from this low, right? This break, and price now starts pushing bearish, 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 until when price what taps the S&D zone. Now, once price taps the S&D zone, we want to see now price change its character from bearish to bullish, right? That means we want to see breaks of structure to the top side. Lo and behold, what do we have, right? A low, a high, a low, a high, a low. When was this high broken? Right here. So with this being what? A break of structure, right? Putting into place this high, which in turns comes back down to do what? That retest or that mitigation into what? That S&D zone there. Meaning that this is your entry. Your stop loss where? Below the low. So let's point it to place there. So could have actually used this one here, which of course was absorbed, right? As you can see, price just went a little bit lower, leaving in wicks and then proceeding bullish, right? So from this area, so that's our entry. Our stop loss on the contrary is there below the low, and our target is what? The overall high right here, right? Boom. So this overall high here, let me put it array here. Boom. So this right here is our what? Our take profit target. Boom. So that's a what? That's a 1 to 5 trade. Lo and behold, there's your TP or next liquidity run being liquidated, right? So as you can see, guys, it's as simple as that. Following 3 steps: structure, S&D, confirm. That's all you need to know, right? Boom. So from that area, you have that beautiful 1 to 5 hour, which also maybe if you could have taken like some partials here, others here, and then leave like 10 or 20% running to catch the extra profits, right? And that's not financial advice of any sort. The risk management part is all up to you guys. So that was example 1. Now let's head back to the 15-minute and see if we could have we could do like one more example and call it a day for the video. Okay, so we are back in business now. I can actually see another place here. So that was like a bullish example, right? So now let's see how we could have taken it in a bearish sort of way, right? So from this area, what do we have? We have price pushing bullish, right? And we now have price breaking lower, meaning that price now shifting to bearish. Lo and behold, we have that retest and then that continuation, which, as we know, with this low here as the next liquidity run, right? So from this area, let's see how we could have taken this entry from this point of supply, right? So let's remove these and put in actual sense, right? So we have this break right here to the downside. We have this low as the next liquidity run, and then we have this area here as the overall supply, right? Boom. So let's roll back to the 2 minutes time frame and see how we could have traded this specific price action. Okay, so lo and behold, what do we have? We have price, as I showed you, breaking lower, forming this low here from this high here, and price now goes back to this area. Doesn't actually tap it, but as you can see, right, it leaves some pretty clear price action here, right? So let's see. So from here, since this break, we were in an intermediary uptrend, right? Forming a series of high highs and high lows up until this break here, right? This break here with this low indicating that price is now no longer pushing bullish, but instead it's shifting bearish. Now, lo and behold, as you can see, lo and behold, price now comes back to retest where at this supply and then leaves, right? As you can see, price leaves. And of course, it leaves us with a bunch of re-entries that, you know, we're not going to talk about them. I just don't want to confuse you guys, right? Let's stick with the simple parts, and then we'll start pushing forward as we progress, right? So from that break, we now have this overall last up move before the down move, which is also the supply zone, right? So this is your short position entry right here. The actual retest was there, short position there. You can either put your stop loss here or above the high. That's, you know, up to you. But as I said, I like to allow liquidation moves because I know I'm right once this confirmation has been given to us, right? Because if price doesn't want to go in accordance with this type of analysis, then you will never get the confirmation part. But once you have the confirmation part done, then you know, it is what it is. So boom, that's the trade. Your overall TP was here. The next liquidity run that was run absolutely beautifully for a 1 to 3 RR trade. And as I said earlier, right, you could close some and hold if you'd want to for these extra profits, right? As you can see, because price has a tendency to run, and once you let it run, then it's going to actually pay you a lot more than you anticipated. So that's it for this one, guys. And if you did like the video, make sure you like it, subscribe if you haven't, turn that bell button on for notifications, and until the next one, guys, stay safe and peace out.